Goldman Sachs highlighted at the end of May. And as a result of free government money and zero cost online trades, millions of bored, unemployed Generation Zers have been crushing institutional investors. This has left Goldman clients wondering why they're paying Goldman a 2 to 3% commission. Reportedly, there has been a near tripling of retail users' activity this year, and the dramatic increase in retail activity has played a role in the recovery rally in equity markets since March. But it also seems to be creating a bifurcated market. So, let's take a look. And as this chart here shows, retail investors, which are shown as the light blue line, have absolutely crucified both the smart money and all money, which is shown as the dark blue line. As you can see, the hedge fund VIP basket of favorite stocks is roughly unchanged year to date. However, the retail army of E-Trade and Robinhood investor types are up almost 30% and have massively outperformed virtually everyone else. And according to Goldman, since the start of 2019, retail has outperformed hedge funds roughly 3 to 1. Since the market bottom in March, there has been a big gulf between how professional investors manage money versus the typical retail investor. Like many things recently, it may have been heightened by the upside down nature of markets and the economy caused by the coronavirus shock, or maybe not. This chart here shows the top 5 most widely held stocks by each class of investor. And looking at the chart, you should be able to see some fairly clear themes. Retail investors have been betting on air travel coming back in a big way. However, the retail investor may also just be picking stocks that have lost the most value during the lockdown. Institutional investors, on the other hand, have been indulging the electronic back office products and particularly the payment component of the market. This chart here is an expanded version of the previous chart. A few things come to mind when looking at the representation. First, the only stock to make both lists is Microsoft. And one generalization is that millennials do not seem to prioritize green companies such as clean energy investments. There seems to be a lack of environmental or social friendly stocks at the top of the Robinhood leaderboard. In contrast, the number of accounts that invested in Ford has doubled since mid March, while those for American Airlines, Delta, and United grew by more than 8 times. As for the institutional players, there seems to be a focus on payment companies. Now, if your opinion of the economy is that demand was slowing along with consumer spending falling, you could be wrong because the focus on the payment companies seems more of a macro bet on improving conditions. However, another theory is that investors believe the coronavirus has hastened a technological shift around the globe, and the companies that dominate the electronic payments industry may simply benefit from a larger share of those transactions. Something that is apparent to me is that the individual investor may be leveling the field with improved technology and better financial education. So here's to you, the individual investor. Keep crushing it. And for today, that's ChewDog Charts. Thank you.